All right, guys, here we go. What prompted this video is that I'm still getting, a lot of questions, concerns, mainly from new people in crypto about how to safeguard their coins. And then number two, about the exchanges. Are there any good exchanges out there, trustworthy exchanges out there? And then the third thing, can you anticipate a market crash or a pullback in a market? And so let's start with the first one. First of all, and everyone that's been around a minute knows the the safest place for your coins is in your own possession. Okay, like anything else. If you don't, if you don't hold it, you don't own it. And secondly, regarding the exchanges, I have absolutely no faith, trust, or belief in any exchange out there, crypto exchange, except for Caleb and Brown. Now, I'm not getting paid to say this. I don't have an affiliate link or anything. I just have a personal account with them and never had any issues. But at the same time, I hold all my, tokens, crypto myself. Okay. And only when I'm going to scale in, scale out do I, send it over there. But anyway, all the, if all, backing up a second, if all the exchanges would actually trade the real, physical, so to speak, you know what talking about, coin, crypto, first of all, we'd be a lot higher in price than we are right now. And I think there'd be a lot fewer issues, problems, with all this manipulation. And what has happened is that they have apothecated and basically trading air, okay? All these exchange, I don't care what they say. And, for example, why don't you try calling up, Robinhood and having them send you a paper copy of your share, okay? See if you can get your shares at GameStop, AMC, or something from Robinhood, okay? Probably good luck with that. But anyway, we regress a little bit. I did this a physical post for our Patreon members. As you can see, the date over here, November 12th. FTX token in regard to seeing the cracks in the dam, so to speak, as far as a potential pullback, crash, whatever you want to call it, in the market. And it doesn't matter, if it's a stock, a crypto, futures, gold, silver. There are indications that things have, run a little hot, ready for a pullback, so on and so forth. And one of those being, and we have a weekly chart here. I can't manipulate it because it's just a screenshot of what we posted because I can't get the token up on TradingView any longer. But anyway, as you can see here, we have the 20. Well, you don't know that. I got to tell you the 20 simple week moving average. And as you get far and away from the 20 on any time scale, 2 minute, hourly, weekly, whatever, the higher the odds, higher probability you're going to get a pullback, okay, into the 20. One of the absolutes is that, price will get far and away from the 20, but it will positively, absolutely 100% of the time come back into the 20, okay? And then when you start trading under the 20 is a lot more bearish than if you're on top of it. And then we had a trend line here. And normally, not 100%, you just got to play the odds and the potential for the probabilities to happen, okay? And the odds are, on the third bounce or third hit of a support line, trend line, whatever, you'll get a little bounce. And then on the fourth or fifth, each time it hits after that, higher odds, higher probability, you're going to break through it and then continue to the downside. So even if you, didn't scale out over in here when you started, getting under the 20, or up here, as soon as you broke that trend line and, right where the red arrow is, started trading under 20, yeah, you could have been scaling out. Now, some people scale out, 10% of the time, at the time, 10% of their investment, total investment in there, 15%. It just depends on your risk management. Everybody's different. Every situation is different. But let me show you a couple other examples. Okay, now right now we have pulled up the Dow Jones, and it's the monthly chart. Each candle is 1 month of price action, and I did a big video on this last weekend. If you want to take a look at that, it's the similarities, correlations of 1920s, the market conditions, what was going on in the U.S. back then, the parallel to what has happened in the last few years in the markets, going into to the to where we are now. Okay, so might want to check that out. But anyway, in the meantime, uh, let me show you a couple of absolutes in the market. And a lot of people go, will say there's no absolutes in the market. Nothing's 100%, but there really is. Okay, they haven't. Well, anyway, one of the absolutes, 100% is that the 20 and the 200 will come together at some point in time. Okay, and the market, as it goes up or goes down, the 20 will get far and away from the 200. And so when they come together, you just basically sit on your hands and wait for the market to show its hand which way it's going to go. Because there's two things that are always, 100% right. That's Mother Nature and the markets. So here we were coming together, and then price, all these moving averages, every indicator is a lagging indicator because it follows the price. And what does price follow? Human, um, greed and fear. Okay, so everything, even that's why I'm going back here to the 1920s to show you the correlation to current markets. But anyway, here we go. 20 and the 200 come together, and price in this situation happened to start pushing to the upside, so the market followed it. Now in the 20s, roaring 20s, industrial revolution, cars, being more popular, electricity, appliances, toasters, radios, for example, et cetera, et cetera. So everybody, was coming in making money. Everybody was fat and happy until they weren't. Okay. Now let me show you this. Now let me back up. In all seriousness, this was multi-generational family wealth being made here. Okay, and for people that uh, you know knew how to play the markets, okay, and where to get in, where to get out. This here was what? Guess what? Multi generational family wealth being lost. Okay, and you don't want to be on this side. You want to be on the side where you're gaining it. Now over here, yeah, you could have made multi generational family wealth too. If you had to do so, or were able to hedge. But not a lot of people are familiar with that. But anyway, as you moved up, there's another absolute, okay, 100%, and I'll show you here on Bitcoin as well, present day. But anyway, sideways consolidation. Most times you'll break out on the fifth candle, okay. And what this is either accumulation or distribution, okay. They're either building, a big pile of shares or crypto or whatever, and then they break it out and then they sell on the way up, okay? Or vice versa. They're, selling off and then will drop it to the downside, okay? So anyway, look out for that as well. And this was kind of a head fake. They do this a lot on, whenever you're day trading, they'll pop a big green candle there, pull everybody in, making a new high of the day. That's the trick. And then they'll roll it over. And normally, uh, this head fake will come, pretty quickly. In the next, two or three candles, it'll hit and then drop to the downside. Sometimes even more than that. But long story short, if you had, okay, well, let me use an analogy here. There were numerous people that became very, very wealthy during the 20s, and they went on, world tours, that sort of deal, vacation all over the world. And then the stock crash came. Okay. When they came back home, they'd lost pretty much everything. And I mean, that's devastating. That's horrible. But I would like to think that if they made it once, they could have made it again, but who knows? But anyway, if they had just told a family member, that's why I think it's so important to teach your children and grandchildren these skills so that they'll never look up one day and their 401k or 203b, is, a third of what it is or a half of what it was. They can, take care of them because no one cares about your finances more than you do. Okay. But I'm getting off subject here. But anyway, only thing they had to tell their business partners, family member, whatever, is that, when prices above the 20, all is good. It becomes back into the 20, then breaks out, add to the position. And then when it starts trading under the 20, especially if it starts closing under the 20, as we see here, 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 here. And this was probably the last one, or even if you got out here, you see how big of a drop it had. Okay. And then uh, it's another video about how we know how to get back in. Okay. But anyway, you had an 89% drop there. Okay. Now let me show you Bitcoin real quick. And we'll go to present day. And right over here, what do you see? Sideways consolidation. Matter of fact, technically called an inside bar uh, consolidation here. Everything's inside the bar. Yeah, we have wicks up. You can even have a wicks over it. But as long as everything's closing inside that bar, it's called an inside bar, sideways price consolidation. So anyway, what we're going to have here is a major move. Now, do I know which way it goes? No. I'm just going to sit on my hands and wait. We could very well crash big, hard, to the downside, or crash or blow up real fast, real hard to the upside. And the longer little hint here is the longer, the more time you have here in this sideways consolidation pattern inside bar, the stronger, the harder, the faster that move will be either to the upside or downside. Just kind of a, FYI there. Let's go to the NASDAQ. Now we looked at the the Dow during the roaring 20s and then the big crash, 89% crash. And then, of course, that led to depression, or part of that reason led to depression. But here we go on the NASDAQ, okay? And if you didn't know it, some of you that are in crypto would probably think this was an altcoin, okay? And you hear people all the time that, hey, nothing goes parabolic, only crypto does. Well, that's not true. Here's the NASDAQ. Now, this was similar to the Industrial Revolution. This was, the internet, computers becoming more popular, et cetera, et cetera. You guys know that history. But anyway, so we had parabolic move again. Some of y'all might have aunts, uncles, grandparents, whatever, that made multi-generational wealth during this period, during the 90s, okay? But guess what? If they didn't know what they were doing, this was multi generational wealth lost, okay? So, but anyway, if you would have told, or knew, see this consolidation right here, where'd it go? Sideways consolidation, sideways consolidation breakout, consolidation here, breakout. See what I'm saying? I mean, it's just all over, all over. And what was the main key here, except for maybe one spot, once it started breaking out of just one area, there was a little head fake there that you closed under the 20. And if that's all you did was buy at the 20 and sell when you started trading or closing, more importantly, under the 20, you could have been out, before the bottom hit. And then those profits, roll back over. And then, there's influencers out there that say, hey, we're going to be, you know, uh, 10, 15, 20, 50 years, whatever the exaggeration is, before we'll come back to the all time high, which that was true. And they're saying that current day that we're going to crash and it'll be, 100 years before we come back to the all time high, which might be true. But was there money to be made here? Yeah, just simple techniques. So don't let people scare you. We have, our Patreon members, they know the three main ways to, get in, get out of a market. In other words, finding the bottom. There's three different ways the market reverses, and one of them is the strongest and best way for the market to reverse, and we teach all that. So anyway, that's in summing everything up here. Number one, keep your crypto off the exchanges, okay, in your own possession. Number two, learn a little, just get, whether it's from me or someone else, get some sort of training, some sort of education foundation of how to scale in, scale out, so you can protect, your multi generational wealth. The reason why I said multifamily because I'm going to be, yeah, we're going to be investing in that multifamily real estate here as soon as we start bottoming out and stuff. We're going to take these profits and roll it into real estate and go from there. Well, that's another video for another day. So anyway, guys, thanks so much for taking time to watch the video. Come and follow us over on Twitter and check us out on Patreon. And we will see you on the charts.